Okay. Good evening, everyone. Uh, Previous day, the topics that we have discussed, I'm just be telling you about that. Previous day, we have discussed the pivot table, creation of dashboard in a lot of details. Also, we have done the revision of the string functions. Uh, we discussed the utility of using the value function along with the string functions, which is very many a times required and is one of the data cleaning techniques. Then we discuss that how we can create a pivot table and chart. And with that, then we use the slicer, and then we have used the slicer, and then the using that I have discussed how we can do the dashboard creation. So we have created the chart, simple kind of pivot charts, and then on that basis, I have shown you how we can create the dashboard, something like this. Just so it's like one option, if you change, automatically the all the charts will get updated, and all the steps I have given you. So this thing we discussed. Then we have done the some financial function discussion previous class. We started with the discussion on the depreciation function, and we talked about the straight line function. We worked about the DB function, that is declining balance method, and double declining balance method. So these things we discussed. Also, we did EMI calculation part, simple EMI calculation. Up to this, we did in the last class. So if there is any question, you can post anything you want to ask, and then I will proceed accordingly. Just checking. I think no questions posted, so I think I can proceed with the next part then. If you miss the class, please connect with the office in this regard. I cannot help you on that. Okay, EMI calculation I will do. I'm good, Kishore, now. Much better. Thank you. DB. Okay, so depreciation function and this part. Okay, so I can use the previous class worksheet only to discuss that once again. So we work with the straight line depreciation. For that, we use the SLN function. And I told you that you can simply go to the function wizard. There you can choose the function category. Accordingly, you can choose the function that you want to execute. And then the parameters that are to be passed that you can see in the function wizard. For the SLN function, three parameters are there: cost, salvage, and life. When you click in a particular field, its corresponding explanation or description is also written over here, which you can read, and accordingly you can use the function. So cost means cost of the asset, salvage is the salvage value, the remaining value of the asset after its useful life, and then life of the asset. These fields, the cells that we select here, all these cells must have only the numeric data. Along with it, it should not contain any string value. Like say, for example, life of the asset is written as 14 years, as you can see in the screen here behind you. Uh, that is in the cell B8. So that cell we cannot select, but what we need to do, we need to take only the numeric value which I calculated here in the C8 cell. So that is why I took C8 cell over here. Okay. Salvage value also the 12% of cost as it is mentioned here. Either I can use the calculation expression here or I can calculate the value on the worksheet and then put it here as a parameter. Now these three parameters, first three parameters are also same for the DB function as well. The first parameter of the DB function is cost, second one is salvage, life of the asset is given as a third parameter. Now DB function calculates the depreciation of an asset in such a way that is the time period for which already the depreciation has been charged. So that will be subtracted from the asset value, and on the remaining, the next depreciation will be calculated. That is why it is called fixed declining balance method. So here it means that for which period we are calculating the depreciation is also equally important. And that is why here the fourth parameter period is also included, which was not present in case of SLN. So in case of DB, these four parameters are important: cost, salvage, life, and period. That means for which period we are calculating it. The fifth parameter which is mentioned here is the month. Here month, if we omit, it means that it considers the number of months in the first year. So if the standard is 12, so that is why we are considering it here. As I omit this value, it means it will take the standard value. That means the number of months in the function in this particular in the year for which the depreciation is being calculated is 12. So we are taking that standard. If there is any variation, then that number of month can be mentioned here. So that is a structure or the syntax of DB function. So using this, I calculated the depreciation here. So you can see this. If you want, I can do it again. Like say the period is 1 to 14 for this detail only. So here the depreciation I can write equals to dB, open the function bracket. And if I go to insert function, click on that. So it will open that corresponding dialog box of the function. Now, cost of the asset here, I can simply select the cell address, salvage value. I can simply select the cell address, life of the asset, and then the period for which we are calculating it. Now, as you can see it here, in case of SLN, the depreciation amount is same for all the years. However, in case of DB, the depreciation amount will not be same for all the years. It will be different. So that is why here we need to create a depreciation table. So depreciation table we need to create here, and so here this depreciation table having the period from 1 to 14 I have written, and here I have selected the period as the first one. Now, as you can see here in this period, we need to drag the formula. So when we drag the formula, the values that are fixed, those must be made absolute. Those cells must be made absolute. As you can see here, the cost of the asset, it is fixed. So when I drag, B7 doesn't have the cost of asset. It is B6 only. So that is why it should be made absolute. Similarly, the salvage value must be made absolute, and the life of the asset also should be made absolute. All right. So that is why I have put $sign in the first three parameters. Now period, it will, as soon as we drag the function down, this one becomes 2, 2 becomes 3 like this. So that is why this D3, this cell address, I am not making absolute. Why? Because we want that when the function we drag, automatically the period will also be updated. So if you click OK, so this will be calculated. Now, if you just simply drag it over the whole life of the asset, automatically the depreciation for the given asset for all these years will be calculated. All right. Similarly, now for the DDB, Now, in these cases, what is happening? We are creating the provision for the asset throughout the life of the asset. It means till the last day of the life of the asset, we are still creating the provision. However, sometimes some companies make it a policy that they will they want to create uh, the whole depreciation provision in the first few years, and there only they want to create the provision for the whole cost of the asset, and so that the fund is all money generated fast. So for that, we can use DDB function to find out the depreciation in that way where we want to do it early. So default is double. So that is we double the rate. So double uh, diminishing balance method. However, here if we mention a particular factor, like say if I write 5, so it will try to complete the depreciation calculation in the first 5 terms or the period, and for the remaining life of the asset, it will be 0. So it has its own way of calculation. So if you want to see the theory of this formula, you can go to Microsoft's website, and there you can go through the theory behind the inbuilt function that are given in the software. Here I am focusing only on how you can use these built-in function. So this DDB here also you can see the first 4 parameters are now common as DB: cost, salvage value, life of the asset, and the period is this, and the factor. Suppose I want to do it within first say 4 years. 4 terms, 4 years. So this we can do. Also, it has to be made absolute. So wherever it is applicable, I am doing that as well. Okay. And now I click OK. It has tried to do this, but it couldn't. It has done in first 7 years. So it is applying that some discounting factor, and accordingly it is doing it. Now let me increase this, say first 5 years, and let's see. Yeah. So here it is able to do that in 5. It has its own, it applies a discounting that factor and automatically tries to calculate it. So this is how we get the result for DB and DDB. Okay. So I hope this part is clear. And next I come to your EMI calculation. I'm just checking for if anything related to this particular topic is there. Any question related to that? Nothing. Okay, now next I'm coming to the EMI calculation part. So I gave this one particular question previous day, one simple scenario, that is somebody wants to buy a property for 50 lakh and bank has agreed to give the loan for 75% of the amount for a term of 15 years. And remaining has to be paid in cash as down payment. Calculate the amount of money Mr. X has to pay to bank every month against the loan taken. And the rate of interest is 14.5%. So this information is given, and then you need to calculate that how much EMI you need to pay for this. So in this case, our total cost, or you can say the property value, Property value is what it is, 50 lakhs. Excuse me, 50 lakhs. And then the loan amount that the bank is going to give is 75% of the value of the asset. So this we can calculate in this manner, right? So 37 lakh 50,000 rupees will be taken as loan. Now, uh, how much down payment will be made? So just as per the question, these details we are filling up. So you can subtract this one, or you can again apply 25%. It's up to you. So this is how the down payment we can calculate. Now the term, loan term is what? Loan term in years is given as 15. I hope you remember I mentioned that in the formulas when we apply, we cannot have the alphanumeric field there. So for calculation, we require the cell value as pure number. So that is why here I cannot write 15 years. That should be written separately, and here only the magnitude of the number should come. Okay, so this we have to keep in mind. And then the rate of interest is given here as 14.5%. So these are the data that we have, and from here we need to calculate that how much amount the person has to pay as EMI. So for that we use the formula called PMT. We can use a formula PMT. So what is that formula? Let us work on that now. Uh, So suppose this is here, I am writing the PMT formula. So for PMT formula, first you need to understand that what are the parameters, the values that we need to pass. So the PMT formula has these parameters. Rate of interest for the loan that we want to take. NPER is the number of payment periods for the loan, number of payments, how many payments will be made. So that we need to find out. PV is the present value or the loan amount, the loan that we are taking, that amount has we have to write. So these are the three compulsory values, mandatory parameters that we will provide. So I come here, rate, PMT equals to rate. Now here, if I straight away use this rate is actually the annual rate. Usually the rate of interest is given as per annum. So it means this 14.5% which is given, it is representing the annual rate. So this rate has to be converted into the monthly rate. So that is why we can divide it by 12 to get its monthly rate. Next is NPER. NPER represents the number of payment periods. Here the loan is for 15 years and we are going to calculate EMI. So it means that we also need to convert it in terms of months. So that means we need to multiply it by 12. So that NPER is the number of payment periods, and then PV represents the loan amount. So here we choose the loan amount cell, and then this is the loan amount. So F24 cell is representing the loan amount. Fine. So these cells, when we are providing the values, we have to keep in mind that rate has to be monthly rate. Number of payments that we are finding out, that also has to be actually the number of months. PV is representing the loan amount, and now click OK. So the value comes here as this. Now here one thing you need to know, that is why this particular value is coming in red and with a minus sign. Can anybody answer in the chat box? that why the EMI value is coming as negative. Take up that question. Why it is coming with the negative sign and in red color? Similar to that, yes, because it is outflow. Yes, Ishan, it is outflow and it is negative because this is the EMI that we need to pay. So that is why it is coming with a negative sign and is coming in the red color. In Excel, the default format for the outflow is outflow, and for the negative number is red color and with a minus sign. If you go to the number format here, you can see here in this box that is currency, and here you can see this negative are represented with the help of, it is a default setting. However, you can always change it. It is coming in red color and with a minus sign. So if you want, you can always change the setting, but this is the default one. That is why it is coming with a minus sign and in red color automatically. Fine. So this is the simple calculation for this. Okay. Now, some of you are saying that it is, yes, it is related with the previous class. However, I also would like to mention that while rediscussing it, I have explained to you the problem as well as the formula once again. Yes, I have done it little fast because it is a revision part. However, I have rediscussed the point once again. So instead of what you have missed, don't focus on that at this moment, because if you focus more on that, you will lose what you are learning now. So the current opportunity will also be missed because the focus is more on what has been, what you didn't get. So later on you can resolve the issue with the office. Right now it is better that whatever I am discussing, you pay attention to that. So this EMI calculation I have shown, it is simple EMI calculation, and here we consider that interest is constant, constant rate is considered for the constant payment periods. Your EMI amount is always constant and so on. Now there are uh, cases where some people say that the EMI which has been paid, that EMI also consists of some part of the principal amount, that is the loan amount. So the loan amount that they have paid already, why they will be paying interest for that? So they want to have it in little flexi manner. So for that, we have one more option for calculating EMI, which is similar to PMT function, but just slightly different from that. That is, here you can calculate it in a little in a flexible manner. So is PMT is a function which actually returns the interest paid during a specific period of an investment. So you can use ISPMT function also to do the same calculation, and in this case it will always calculate the interest on the remaining loan amount, not the full one. So for that we can create a loan amortization table. So that I am going to discuss now, and I am going to take this same question. So this is a new topic, and this is the topic that we are going to talk about today. So PMT is there, we have already done. Now I am going to discuss this ISPMT function, and I am going to use this same problem. Fine. So I'm just doing it copy paste here. Fine. Now with this, we will be doing it. Okay. So just for the sake of saving little time, what I'm going to do, I am just going to take this also here. And which will help us to make the thing little faster. Okay, so now we know our loan amount is this. This is our loan amount now. And this is the term for which we are doing the calculation. This is our rate of interest. Okay. So with this information now we want to create a loan amortization table. So what we need to do at first, we need to know the interest to be paid over the over 15 years, right? And a little bit small amortization table we need to create. So I am going to do it here. So just see this at first. Let me write down the headings and check that. And right now I am calculating interest separately. However, later on we can club both the things together. Okay. For the time being, as initially we are just learning this at first, so I am creating it separately. So what I am going to do, I am going to find out the EMI to be paid every month to the bank for the given case. Loan amount is this, our term is 15 years and the rate of interest is given. In case of ISPMT function, your period starts with 0. Okay. So this you have to keep in mind. With ISPMT function, the period starts with 0. So it means in this case, what is our term or the number of payment periods? This is equal to 15 into 12. So our number of payment period is 180, right? Okay, now I'm going little slow. So number of payment periods here is total 180. In case of ISPMT function, period counting starts with 0. So it means it will go from 0 to 179. So when we are calculating this table here, my value should start from 0, 1 and then it should go up to 179. Is that clear? It should go up to 179. Fine. So it means if I keep it up to 180, so this 180 here, it should come as 0 or something, right? So if I calculate ISPMT up to 179, a value should come. And when we do it for 180th time, in that case, it should return 0 because then it is not applicable. Fine. So this is fine. So this you have to keep in mind at first. Working with ISPMT, our period calculation starts with 0 if your term is 180. So it means when we put it in formula, we need to calculate up to 179. Next. Okay. Now, in this interest column now, we will be applying ISPMT function. So I'm writing ISPMT and then see, I want to open my function wizard here for the to understand this. So what is the rate? Rate of interest. Rate of interest is 14.50 divided by 12. Effective monthly rate. PER is the period for which you want to find the interest. We want to find it for this period. It is given here. Sorry. Next is NPER, total number of payment periods in an investment. What is that? My total number of payment periods in the investment is 15 into 12, that means 180. So I could have taken directly 180, or I can write the formula. I am connecting it with my master data part. And PV is our loan amount. Fine. So I choose this loan amount here. Fine. So now I click OK. And my interest is calculated here. Fine. Now, if I just simply on the bottom right corner, you can see this plus pointer, black plus pointer appearing. Now, if I just simply double click on this, what mistake I did? Can anybody tell me what mistake I did? I did not give the dollar sign. That is, I did not make some of the cells absolute, which should have been done, right? So I need to do that. So here this, all these addresses, that is my interest rate, number of payment periods, my loan amount, all these cells must be made absolute, like the way I did it in case of PMT function. This also I need to make. And PER, this should not be made absolute. This must be normal, right? That's why it was good. Okay. So now when we drag this, we will get the interest calculated for the entire period. Okay. And here, as I mentioned, in the last cell, you will find 0 if your calculation is correct. The extra term that I drag, that is 180, there I get 0. So it means my calculation is correct. Fine. And if you want, you can convert this the format of the data that appears here up to 2 decimal places. So you can convert it to that format so that it looks little symmetric. Yes. Okay. So this got calculated now. Fine. So what I did, I wrote ISPMT, and then what I did, I have provided the value for all the parameters. The first one is the rate of interest, which is usually annual. And here also the annual rate is given. So I'm dividing it by 12 to get the effective monthly rate. Then PER represents the period for which we are calculating it. So that period you need to choose. And after that, what you need to do, you need to provide for the number of payment periods, which is term in years, multiplied it with 12, and then the loan amount. So when you give this, your whole interest gets calculated in this way. Now, after this, so this is how we can calculate the interest, interest for the loan. Okay. Now, the next part is now how we can bring it into this table, this loan amortization table. And here how we can provide all the values for this. So now here, first we start with, I insert one row here so that parallelly you can connect. So here the balance is equals to my loan amount. Okay, see this carefully. Mane, we are starting with the loan amount. The first one is the loan amount. Now, how much principal amount is being paid here? We, in this particular setup, we are paying the constant principal amount throughout the loan term. So it will be equals to this amount divided by 180. Our total number of payment periods is 180. So if I divide it by 180, I am getting the amount, the principal amount that will be paid every month, right? So this value, I make it absolute, and then I will drag it throughout up to that 179 rows, 180 rows basically. Fine. Now, what is the interest that we need to pay every month? Interest we have already calculated in G column here. So in case of interest, I am writing equals to, and then I can use this. Fine. Please see this carefully. And now if I just simply take it, so automatically it will bring the data from that column over here. Okay. Next. So how much EMI is to be paid? EMI to be paid is equals to principal amount plus interest. Fine. Now, if I do this, in this case, interest is coming negative. So here, if I put plus, it is actually subtracting the value. So that is why what we need to do, we need to take the absolute value of this number. That means we want to ignore the negative sign. So this is how we get the EMI to be paid every month. And then what is the remaining balancing amount here now? The balance is equals to this minus the principal amount paid here. So this is the balance amount every month. Fine. And at the end, you will see we get this 0. Now this has come because here I have kept this for the checking. That is why this 0 has come. So you can see in the last cell, the balance should become 0. If it becomes 0, it means that your calculation of this table is correct. Fine. So just have a look at this, what we have calculated, what we have done. Okay. So what I did, I have created this loan amortization table with the help of ISPMT function. Every month we are giving the equal amount of principal paying back and the interest that will be calculated next time for that period. It will always be on the remaining balance. It will not be on the it will not be constant interest, but it will be on the remaining principal amount. So that is why interest amount will differ every month. And that is why your EMI value will also differ every month. So in the first period, it will be higher, and the later one subsequently, it will be lower. Also, the balance amount, the principal amount is also reducing every month, and gradually it becomes 0 in the last term when you are paying it. Okay. So please just see this, what has been done here. I'm showing you the formula. You please go through it. I'm giving you a few minutes to go through it, absorb it. And if you find it any confusion, then once again, in that case, I will repeat. So first, I'm showing you displaying the formula in front of you. You please see the whole thing together in front of you and try to understand. I've reduced the size a little bit so that you can see the whole thing on the same sheet. Just trying to Just I've reduced so that reduce the size so that you can see the whole formula and the table, both the tables together here. You can take a screenshot of this. Okay, because all these formulas, it will be very difficult to post it in the announcement section, this part, because you can see the formulas are interconnected with each other, and if you don't have the whole scenario with you, it is very difficult to interpret the formula. Okay, so that is why just go through it, and then I will just giving you 2 minutes for that. You take just go through it and then ask me if you have any questions. Okay, so I hope you have gone through this whole thing by now. So some of you have asked maybe if it is equal monthly installment EMI, in that case, how can this EMI value be different? Yes, here our this is not exactly in that way we are calculating. We are actually calculating that what will be the monthly payment for this particular loan that has been taken. And here, in case of EMI, that PMT function, when we are using it, in this case, it is actually the equal monthly installment. But here, in that case, your monthly uh, the principal amount that is being paid and those things. So it is considering everything as a constant, interest and all those things. But in case of, in this particular example, what we are doing, we are considering that interest will be paid only on the remaining principal amount. So in this case, this EMI is calculated on the fixed loan amount, and then considering all other factors fixed, constant. So in this case, whenever it is calculated on the loan amount. But in this case, it is calculating on the remaining principal amount. So that is why the calculation differs, and accordingly, we are calculating it. Here, it is not exactly equal monthly installment, but in fact, if you are comfortable with MI, you can write it as MI, that is monthly installment that you need to pay for this. So that if you are more comfortable with this term, you can use this monthly installment that has to be paid here. And so for that, we use this ISPMT function. Okay. Now, in this case, one more thing just I want to add here. That is this interest that we are calculating here. We have done it in a separate table. However, Usually it we can do it here as well. It's not we have to do it in a separate table and then use it over here. So what I am going to do now, so I'm entering one column here called period, for which we are calculating it and just clubbing the function here itself. So in this case, I am making it like say that 0, 1, or if you want, we can make it 1 also. Because usually when we count, we are more comfortable in starting the counting with 1. So we can write it here as 1. In that case, in the formula, we have to do that adjustment, right? So here I'm writing is PMT, and then I come to this part, rate and period is this minus 1. So whatever it is, we reduce it by 1. So in that case, we will get the desired period as per the function. Okay. So if you want, you can do it in this manner also. So I'm trying to show you all the possible ways that we can use. Okay. Also, we need to make it absolute. So we can do it here itself. And here we don't need to use any function, simply. So if we do it in this way, we can, in a single table, we can do the task, achieve the task, and we don't need this now. So we can simply remove this. We don't need it. We can easily do it straight away from here itself. Okay. Just check this part also. Okay. Okay, so for the time being, I stop this type of calculation here only. So we have seen two ways of calculating this, say, amount that we can pay back to the bank for the loan taken. One is the simple EMI calculation using PMT function, and another one we have done using your ISPMT function. Okay, just quickly. This we have to use here only. It's not able to. Okay, I'll show it to you later. For the time being, I've shown you the EMI calculation using PMT and the monthly installment calculation using PMT function, ISPMT function. Okay. So up to this, here I stop for this type of calculation, and whatever the interest amount is given, accordingly it is coming. ABS stands for absolute function. So it picks up only the magnitude and ignores the sign of the number. So generally we use absolute function to pick up the magnitude of the negative numbers. So we don't want to consider minus sign. We only want to take the number. So in that case, we embed it within ABS function, which stands for absolute. Okay. Yes, interest rate is converted into months also. Interest is in negative. So here what I did, I have applied ABS function on that. I have embedded ISPMT function within ABS function. So that is why here it is coming positive now. Earlier it was negative. So to make it proper, like first I have shown you doing it separately in different columns, different tables we created. And now what I have done, I have simply created the loan amortization table by embedding the formulas together so that you are getting final table like this, which is presentable, and directly you can understand this. Here also period, if I write 0, might not, and people may not understand. So that is why it is for us that the way we create the sheets, it should be easily understandable by the sorry, end user. So that is why here what I did, instead of writing 0, what I wrote the period as 1, and is starting with 1, and I am subtracting it by 1. So whatever the period is, if here it is showing 4, so it will automatically reduce it by 1 and make it 3. Because in this formula, the calculation starts with 0. All right. So that is why this I have subtracted as minus 1, and I have put the whole formula within ABS function to get the magnitude of the number. All right. Madhumita, please check your formula again. Yes, Avi, I'm not going into that right now. The question that you have posted right now, yes, you can mention the period, and accordingly you can find out that extra principal paid in the mid period. But right now I'm not going into that because a lot of queries are coming for the one that I have shown. So right now I stop here only on this. Sujal, you are still in autofill. Please keep it noted down somewhere. So I will give one revision class after I finish more or less all the topics as listed in the syllabus. I'll try to cover all. And then in the last class, we will have one revision class where these key points you can tell me the topics, and I will have discussion on those topics. Okay. Okay, this table calculation, some people want me to repeat this, so I'm just doing it quickly for you once again. I'm just doing it. I'll make it fast. So here in this case, as mentioned here, your principal amount, this loan is 37,50,000. So here I have bring that value is equal to, and the cell address, it has come here. Now the period for which we are calculating In case of is PMT function, the calculation starts with 0. However, if we write here 0, some people may not understand why it is 0, or if suppose you are creating a loan amortization table like this and you are giving it to different clients, they may not understand the meaning of 0. So they want to see it like, okay, first year mein kya hua, second year mein what is there, and so on. So that is why what you can do is you can write the numbers and start from 1 and do it up to 170, 180. Fine. So this we can do. Next is the principal amount will be what in this case, what we are assuming that the principal will be paid at money. It will be equally divided over the whole term of the payment. So it means that this principal amount divided by, I need to divide it by the total number of months. So that is why I am taking it like this, or straight away I can write 180, or I can use the cell address into 12. So this is the principal amount that will be paid over 180 months. Okay. So what we can do, we need to make it absolute, of course, and I can make this also absolute, not needed. We don't need to change this. So our first assumption in case of ISPMT function is that equal principal amount will be paid over the whole loan term. Fine. So that is why we are dividing it by 180. That is the total number of months for over which this loan will be paid. So principal amount is divided by 180. So it comes to this. Now, what would be the interest? So interest would be high in the first period, money first month, second month it should be little less, third month it should be further less, because in the first month along with the interest 20,833 is also of the principal amount is also paid. So that is why that should be reduced. So it means the interest amount calculated over the years like this will gradually decrease, right? Here we are going to use ISPMT function for doing the formula. So I am writing ISPMT. If you are comfortable in typing the formula in the cell directly, you can do that. If you are comfortable in the function wizard, you can go there and then do it. It is your choice how you want it to be done. Now the first parameter is rate. So I click on this rate, take the rate of interest and divide it by 12, as we are going to do it per month basis, and make it absolute, of course. PER is the period for which you want to find the interest. In this case, it considers the first one as 0. In its theory, it is written. It starts with 0. So that is why what I do, I am subtracting it with 1. So 1 minus 1 is 0. For the next period, it will be 2 minus 1 is 1. 3 minus 1 will become 2, and so on. So whatever this period value is, I am subtracting it by 1 to get it as per the syntax of ISPMT function. Fine. So this is period. Next is NPER, is again the total number of months for which is this will be paid. So I am calculating it. I am multiplying the years with 12 and making it absolute. So it becomes like this. Next is PV, that means my loan amount. And that also I have to make absolute, because finally I am going to drag down the formula over all the cells. Okay. So now I click OK. So it is calculated. Now it is coming negative because it will be a payment. So that is why it is calculating it as minus. So what we can do, as we are going to find out how much monthly installment we need to pay, it means we need to add it with the principal amount, and then that will be my final payment. So we only need the magnitude. We don't need that minus sign. We know this is the payment that we have to make. So we don't want this minus sign. So that is why I am removing that by using absolute function. ABS, absolute means simply ignore the sign and pick up the number. Okay, so this is how this is calculated. And then simply I drag this. So I'm going to get it up to that last cell. Next is, so what is my monthly installment? What will be the monthly installment? Simply add the two, principal amount plus the interest to be paid. So this will be the monthly installment to be paid to the bank. And then what is the balance amount? This balance amount is for the loan. What is the balance amount? The balance amount is this above value minus the principal amount that is being paid in that month. Fine. So after the first month's payment, this much loan amount is still outstanding. After the second month's payment, this is the loan amount, this is outstanding. After the third month's payment, this is the loan amount which is outstanding. So this is the interpretation, this is how it is calculating. So that is why what I am doing, I am not making it absolute. I am just taking the balance amount above it minus the principal amount which is paid in that particular month. Fine. Like if I click on this cell, this is E64. So here you can see it is taking the previous month's total loan amount, money balancing loan amount, remaining loan amount minus the principal amount paid this month. That is the current month's remaining outstanding amount. So in this manner, one by one, it is calculating it for all the months. And then finally, you will see that the last month is what? 180th month. So there the value should come as 0. If this value comes at 0, it means that finally my whole loan is paid and nothing more is still remaining outstanding. So in the 180th installment now, exactly I am paying this much amount and then finally no more outstanding. My loan is completely paid. Okay, so this value should come as 0. If it is not coming, it means somewhere, some in calculation, somewhere something is left. So in this manner, we are doing this. Okay. And somebody asked me, I don't want to complicate the thing right now, so I'm not going into that function or implementing and showing that. Someone just asked me, I'm just telling you what you can try. Is someone told me that somewhere, suppose suddenly the one who has taken the loan has got some amount and is repaying a substantial amount somewhere in the middle. Suppose after 100th, suppose after 100th this installment here, the person wants to repay some substantial amount. Say maybe the person wants to pay suppose 5 lakhs rupees here. So when the person is paying 5 lakh rupees here, which is not as per the pre-agreed plan, so in that case, you have to close your table here only in this row. After that, you have to calculate separately that what is now the remaining amount. For that, once again, a new table has to be created, applying all these formulas. All right. So that you can do, because it is not as per the case with which we have started. So in between, if there is any payment, it means your table has to stop here only, and then you have to subtract that amount which you have paid. And then for the remaining amount, once again, the same type of calculation once again has to start with the new values. Okay. So this is how we can solve that problem. So it is okay up to this. Can I go to the next topic now? Well, Prerna, I think you all have the syllabus with you, the practical syllabus, skill training syllabus. I am just covering from there. I am taking the topics from there, and then I am discussing it in my way. I'm trying to uh, show you Yes, Saraswat, your this thing is visible. So I'm trying to show you these things from the practical implementation point of view. So a few of the things I'm doing. Okay. Okay. So now I'm going to the next topic. This is rather simple. So we have completed up to this. This I will do later. Right now, let us stop this part of calculation here only. And all these we have done. Now, I'm coming to the simple ones. This is annuity calculation. Some people were asking. So this PV, IRR, NPV, the simple application of these functions. So basically, suppose you have got, okay, somewhere I wrote, yeah. Suppose trying to show it in a simple way. IRR stands for internal rate of return. Suppose right now you have some amount of money and then you are trying to explore the different type of investment proposals that you have got. So you have got certain proposals and you want to evaluate those and try to figure out which one is more profitable for you. So say for example, right now you are having some amount of money. Suppose you have got, suppose 10 lakh rupees. Okay. So this is the amount you are having and this amount you want to invest somewhere. So now you talked about it with different people and they have given you some other different proposals and now you want to evaluate that which one is more profitable to them. So here, say proposal one is saying that if you invest full 10 lakh rupees, it is going to give you a return of say 2 lakh, say 40,000 for consecutive 5 years. Okay, so this is one proposal. Proposal 2 says that it's a very small project, so we don't need 10 lakh rupees. But if you invest 6 lakh rupees right now, so in that case, this project is going to give them a return of say 1,80,000 5 times. Money 5 times it is going to give this. Okay. 1, 2, 3, 4, 5. Yes. Okay, so this is proposal 2. It says that you invest 6 lakh rupees now and it is going to return 1,80,000 rupees for consecutive 5 terms. There is another proposal which says that you invest 8 lakh rupees now and you are going to get a sure return of say 2,35,000 for 6 years. 6 times 3 and 3, 6. So this is extra. So now you want to see, you want to know now which one is more profitable to you. So definitely in order to invest in various things, in any proposal, there are various things that we need to evaluate. However, internal rate of return is one of the important factor that we need to evaluate before making any kind of investment, right? So we can calculate IRR, internal rate of return, to find out what is the return rate of all these projects, and accordingly you can try to take a decision. So for that, what you need to do, you can simply use IRR. It's a very simple function. You need to select all the inflows and outflows of the proposal together, and that will give you IRR straight away. However, the outflow should be outflow should be written with a negative sign. Okay, outflows should be written with a negative sign so that the function understands that this is the outflow and these are the corresponding inflows. Okay, so if you use simple IRR function and here simply select the outflows and the inflows together, this will give you the rate of return for that project. Okay. If you have extra terms, so in that case, you need to select that. So this is what we are getting with the help of this particular function. Is this clear? If I remove one of the value, you can see that how much it is affecting the return. Okay, suppose somebody is saying, no, in proposal 2, suppose it is 6 lakh you invest now and you are going to get 1,80,000 for the next 4 years. And the third one is, say, I just remove those values just to bring the values near to each other. Now here there is one more thing. Here it shows the percentage as a whole number, but sometimes it may happen that you have applied this and you are getting in two cells the similar value, like say in both the cases 7%, 7%. So in that case, what you should do, you should select the values and then bring the decimal part as well. So now here you can see that it was showing 6%, but it is actually more than 6. It is 6.4. And this was showing 8%, but actually it is less than 8. It is 7.71. And this was showing 7%, but it is actually less, 6.78%. So the exact value you will get if you bring it up to 2 decimal places. So in case of interest rate, that should be done. Okay, so please just note it down what you need to see here. Just you can take a screenshot of this also. Okay. This is about IRR. Okay. The simple application. Acha. Now the next is say use of PV function. Like suppose this we can use in some scenario. Like say suppose what you need to do. Suppose you have some future requirement. Suppose you want to do some higher studies somewhere, some specialized studies, and for that you require some fixed flow of income. Okay, say maybe to pay the fees of that course, or for some requirement, for some planning. Suppose you want to build a house, and for that you require some specific amount of inflow every year or every month. So in that case, you want to know that how much you will invest today, how much you need to invest today at the current market rate, so that you can get that amount of inflow in the coming years. Money, the future value, the income that you want, that you will specify, and on that basis it will calculate that today how much you need to invest. Okay. Like say there is a proposal somewhere, that is you work with them and they promise you that, or suppose you want to suppose there is one proposal here, what they are saying that current market rate is say 12%, and the constant income that we require here is for suppose we require it for suppose 6 terms. So it can be years, it can be months. Suppose we consider it year only, annual suppose. So Suppose you are going to do a course for 4 years, rate of interest is 12% per annum. And what you require, how much money you require? You require 2,50,000 every year. Okay. Fine, 2,50,000 every year. So now you want to know that how much you need to invest today so that you get at this interest rate for this time period, you get this equal inflow. Fine. Similarly, you can try out for some other combinations as well. So here I'm writing PV function. And here we are having all these parameters. This is the rate. Suppose the annual one we are considering. NPER is 4, that is 4 years. And how much amount we require? This is our PMT amount. So now if we do this, so it is saying that today we need to invest this much. Then only we will be getting this required amount for 4 years at this interest rate. All right, so this is how we can use this PV function. Say another proposal is, say you want to suppose the interest rate is 15% and you require it for say 7 years for doing something, and here the amount required is less. You require only 1,50,000, but continuously excuse me. Continuously you need it for 7 years. So in that case, what would be the amount that you need to invest today? So you are trying to evaluate the different options, the different proposals, and accordingly you are going to take a decision. Suppose in this case, this will be required for 5 years and the monthly flow of money would be say 3,10,000. So in that case, how much you need to invest today? Okay. So in these type of cases, this is just one example. So in these type of cases, you can use PV function or annuity calculation just to find out the result. Okay, so you can take a screenshot of this and okay, so I just take a screenshot of this. See how we can use IRR and PV function. Okay, so okay, similarly, NPV function also can be used. NPV function you can use like say discounting rate or interest rate is given, the cash flows are given, and then you want to know that what is the current net present value of this. So in that case, these functions are very simple to use. Simply just take this and the values for which you are doing the calculation. So this is showing you that for these cash flows, for these future values for the coming 5 years, I'm assuming that because the rate is usually annual, so this is the amount. Suppose I see that no, my cash flows will be just, I'm increasing the values by somewhere reducing, somewhere I'm increasing, and so you can see that accordingly the impact you can see on the result. Okay, so it can be for, it is not necessary that always it is increasing, sometimes it is less also. Okay, so this is how this simple PV, IRR and NPV, these calculations can be done. Okay, I stop here for 5 minutes now and just a small break, and then I will start with macro discussion today. Okay, so we will do macro. After this, we will discuss macro. Okay, so till now, whatever we have discussed, please go through it, note down the points, the formulas that we have used. I have shown you just one variation. There are many, many ways in which these can be used. So just take a note of this. Then we will, after 5 minutes, we will start with macro discussion, that how to create a macro and what it is all about. We will be doing that. Someone reminded me to put my laptop on charge. Thank you for putting that message. I forgot to switch it on. Otherwise, suddenly my the whole system would have been down. Okay. So this formula, some people want to see the formula again. So just see this. Okay, now I'm just removing the lines in between so that I'm trying to bring all these together. So if you want, you can take a screenshot of this also. Okay. And keep it as a reference. All won't come in a single line, single screen. I have to further reduce the size otherwise. So up to PV you can take, and then NPV I will take. This will make it separate. You can understand this section belongs to IRR. This is for PV, and now this is for NPV. Okay, so our formula is shown. Now I am going to discuss macro. Now, what is macro? Now see, macro is something that help us to record the number of series of work uh, into a small formula or a shortcut or just in a single button click. So for example, here, say I'm writing name. Now this name, I want to suppose increase its size. So what I'm doing, I'm just clicking on this and the size gets increased. Now how it gets increased? When I am, sorry, I click on the cell and I click on this font increase button, increase font size, it is immediately executing some code written behind it. That means just with a single click, some series of steps are being executed. So when we want to convert our series of steps that we have done into a single click or a single, say, shortcut key combination, so in that case, we can create a macro. A very simple example, suppose you are the sales manager of a company, and the company, it is having suppose 50 outlets in the city, including the extended city. It is having 50 outlets, maybe like say Pantaloons or Big Bazaar or Kolkata Bazaar kind of thing. So in that case, you are receiving the sales data from each and every outlet every evening. What you need to do when you receive that, you need to collate all the data together and then you are preparing your report. Now, whenever you are collating the data or whenever you want all these outlets to maintain this in a specific format. So whenever you are receiving the data from one of the outlet, what you need to do always, you are first in the first row for these cells, suppose from A1 to M1, you are always applying some formatting and writing the company name over here. Right? So say the selected cells A1 to M1, I will merge And then I will apply some font formatting on this. I will type the company name. So these, and then maybe changing the alignment and so on. So doing some kind of formatting, some things on that. So it includes minimum 4 to 5 steps, can be more also depending on what I am trying to do. So all these steps, when I need to do it regularly, every day, say for 50, say for 50 companies, I am bringing it, and then just 1 minute, excuse me, charger. मेरा हो गया टेस्ट ठीक है मतलब कर सकता हूँ करो करो जो करो okay so yes, so these series of steps, these 5-6 clicks that we have to do for each and every company's data. So it means if there are 50 companies, so 50 into 5. That means 250 times you are repeating, 250 clicks you are doing. So if all these can be converted into less number, in that case, that will be much convenient for us. So macro is created to convert repetitive series of tasks or steps into a single step. Okay, in a shortcut key or a single step or a single click. So that is the advantage of using macro. Now, these macro that we here, so I will apply macro. So here I'm writing these macro we can create in 2 ways. One is one macro is what? It is location specific macro. Okay. And another one is location independent macro. Now, what is the meaning? Location specific macro means it will always be applied on a fixed cell address. Right? It is applied on always a fixed cell address. And location independent macro means it is applied as per the current cursor position. Right? So this is how we can understand this macro. That is 2 type of macros you can create. One is you can create a location specific macro, or you can create a location independent macro. So if you want that whatever be your cursor position, but you want to apply the macro always at a specific location, at a specific cell address, that can be done. If you want the macro, if you want to apply the macro as per your cursor position, that is right now my cell B7 is selected. So macro will be applied here only. If I am in cell, suppose G10, my macro will be applied over there. So in that case, we go for location independent macro. Fine. Up to this, it is clear. Okay. Now, if you understand why we do macro, which type of macro you want to create, then the work becomes much easier. Now here, macro option where is available? It is available under view tab. We have this macro option. Under view tab, we have macros, and under this now we can work. Now, under this, if you click on this drop down, we get 3 options: view macros, record macro, and use relative reference. You need to understand the meaning of all these, and then creating macro is Fine, but first you need to understand the concept behind it. Now, as the name indicates, view macro means if you click on this, it will show you the master macro dialog box, and whatever macros are created here, those will be listed. If you want to execute, you can do that. If you want to record a macro, it will take you directly to a screen through which gradually you can record the macro. Fine. Now, what is the meaning of this use relative references? So this is very important. If you want to create a location specific macro, if you want to create a location specific macro, in that case, use relative reference must be off. Matlab must be, you can say, disabled. Okay. If you want to create location independent macro, here use relative reference must be enabled. Fine. So this you have to keep in mind. If you want to create a location specific macro, your use relative references option must be disabled. If you want to create a location independent macro, in that case, your use relative references must be enabled. Fine. Up to this, is it okay? Up to this, whatever I have said, is this okay? Okay. Now, in order to work with this macro, what we need to do, we need to go to View tab and Macros. Now, the first thing that I want to do with this is, first I want to show you how we enable or disable this use relative references. This use relative references, right now, just have a look at this icon on the screen very carefully. Right now, this particular option is disabled. Okay, it's a toggle button, simple toggle button. Right now it is off. Now see, I click on this, it goes away. Now see, once again I come back to this. Now can you see there is a fine line around this particular icon now? Use relative references. A very fine line appears around the icon. It means that right now it is enabled. Again I click on this. Now see, that line is gone now. It is now disabled. Is this okay? This you need to understand very carefully. Use relative references must be on for creating a macro which gets executed as per the current position, and it must be off if you want to make it fixed. All right. So please note it that this use relative references, you have to keep it in this way. You can take a screenshot of this also. Later I will show you because little bit editing I'm continuously doing on this. Achha. So this you have understood what is macro, what are the types of macro that we can create, that is also clear now. Where do we get the option, that is also clear to you. Now, one more very important thing that you need to remember is that the file in which you have created macros must be saved as macro enabled file. This is very, very, very important because if you fail to save your file as macro enabled file, in that case, the macro will not get saved in your file. Am I clear? So when you go to file, save as, and then here in the save as type, you have to choose this macro enabled workbook. This is very, very important. It will save your file with an extension XLSM. The extension of the file becomes XLSM. Okay, so this will be the file extension, and this is very, very important. So let me write it as exactly the way it appears there. So workbook. Fine. Another very important thing is when you open a macro enabled macro file, the file that has macros. When you open a file which has macro, you have to enable macro. A button comes automatically. You have to click on enable macro, then only you will be able to view it. Otherwise, you won't be able to view it. So while opening a file having macro, you need to click on the button enable macro. Okay, so you have to keep these points in mind while working with macro. Okay, so I hope some basic idea I have given you, and while working with macro, you have to keep these points in mind because otherwise you will not be able to save your macro or you will not be able to work with the file which has macros. Okay, so this is the basics of macro that you need to know at first. So now let us start how to create a macro. So first I'm going to create a location specific macro, a very, very simple kind of macro I'm going to create, like the example which I gave you. That is just in the first line, I will be what I will be doing, I will be creating a macro which will display the company name in the first row. Fine. So I go to a new sheet here and here I am going to apply this. Fine. So what to do? First I'm showing you, later on I will write the steps. So click on view, macros. Use relative references must be disabled. Click on record macro. It will ask you to give a macro name. So any logical name you can give, say I am writing, say CEO name, my company name, and shortcut key. So say I want to create a shortcut key for my macro also, so I am writing Control T. In case if this shortcut key is not available, you will see automatically it will change it to maybe Control plus Shift, maybe Control plus Shift plus Alt. So it will automatically change that. Okay. Next is store macro in. This shows the scope of it. Do not change it. Let it be the default one. Okay. Description. Now we create the macros for repetitive use. So in case if we create the macro and maybe after a few months, whenever again we want to refer to it, we may forget that for which purpose what was created. So here we can write some description about it. It is like writing a narration in accounts. So here say I write, I'm writing as a description, write company name as ABC Limited in first 10 cells in the worksheet with some font formatting. Fine. So this is the description I wrote so that even if I open this macro after maybe 6 months, I'll remember that what I did in this macro. Just click OK. Now you have to go a little slow while creating macro. Now, right now, we are in the recording mode. Means my macro recording has started. Now, whatever I do on the screen, that will be recorded in the macro. How do I understand that my macro recording is going on? You can see this. Please follow my mouse pointer on the screen. Don't click on this. Can you see this square box here in the status bar? So if you put your mouse pointer on this gently, you can see this message, a macro is currently recording. If you click on this, it will stop recording. So unnecessarily, we should not click here and there and just explore the things, but we should do exactly what we want to do. So what I want to do, I want to create cell, bring the company name in the first 10 cells. So I select all the first 10 cells. I merge it, I give some color, increase the size. Here I am writing the company name as ABC. I want to bring it in capital, ABC Limited. And right up to this, some formatting, say. So these are the things that I have applied, simple things. I can stop recording from here also, or I can go to view, macros, stop recording. Right? And many people forget to stop the recording. Okay. Especially students. They create a macro and then just kaam ho gaya and they continue to do their work and forget that they have to stop the recording. Then what happens that it overflows the buffer, the memory, and it basically creates a problem in the file. So we need to carefully stop the recording. It is done. Fine. Now I can go to some other worksheet, create a new worksheet. I press, my shortcut key was Control T. So I press Control T. You see this, right? And here it was 170%. So if I make it 170, see, it is looking exactly that same way. I go to another worksheet. Right now, my cursor position is say A2, say something like this. What is it? 20,000. So A20,000 is my cursor position right now. Take it here. And now I press Control T. See. Understood? This is called location specific macro. So whatever be my cursor position, it will not bother about that and it will create the macro exactly at the position for which it has been created. Right? So is this clear? How we can create a simple macro in this way? Felicia, your name is visible, that much I can say. Okay. Rest office can confirm later. Okay, so this is a simple macro creation part I've shown. Now, so another one is what I can show you here is that using a macro, can we do some financial calculations? Okay, like so simple that depreciation calculation. Can we do that using macro? Can we do the depreciation calculation using macro? Or shall I proceed further with macro now? A simple example. Yes, macro can be used for that as well, Pratik, right? It can be used for making dashboard also. You please try that. I am gradually moving towards that. I will show you how to create the functions. For that, you need to learn how to create a location independent macro. That you need to learn. Then you can try out exploring all the other functions, other things that we have done till now using macro. You try out, I think you will be able to do that. Okay, so this first part I have shown. Now simple calculation of that, your depreciation calculation. From here only I'm just taking cost, salvage and life of the asset. So I take it here, cost of the asset, salvage value and the life of the asset. Fine. So see, for this I want to create a macro. So wherever this is given, okay, we want to create the depreciation using, say simple, we are just first learning. So simple, uh, we are simply doing it using your SLN function. Okay, so simple SLN function we will be using to create this macro. Fine. Now, so I am putting some value here. Salvage value, say lakh, life of the asset say 12 years, and now SLN. Okay. So this has to be location independent macro. This is what we are going to do. So the first thing is what? We go to view macros. We have to switch on this use relative references. I have mentioned here already. You need this use relative references must be enabled for location independent macro. Okay. So first I need to enable it. So I've enabled it. Just by clicking on this, it gets enabled and you can see a very fine line comes around that icon. So you can understand, you can identify that it is enabled. Okay. Now keep your cursor here. Now go to macros, record macro. I'm writing, say, my SLN. Okay. And control, say, I want to do D. Yes, it is there. So I am writing here in the description, say depreciation using SLN function. That is the description. Fine. Click OK. My shortcut key is Control D. And now what I do in SLN cell, I am writing now this formula: cost, salvage value, life of the asset. So this we have done already. We know how to calculate the depreciation using straight line method using SLN function. Okay. I press enter. This is done. Then on this cell, I want to apply this and go to view macro, stop record. Done. Fine. Now I go to some other location. Here now I have written cost, salvage and life of the asset. And here we will have that depreciation. Fine. So the cost, say 12 lakhs. Salvage value is say 1,40,000. Life of the just 12 lakhs. And 1,40,000 is the salvage value and life of the asset is suppose say 8 years. And you want to calculate the SLN depreciation. Right? So what I need to do? Control D. See? You see this? And here along with that, I also applied that color. So it is converted automatically into that form. Okay. Is this fine? So this is how we can use macro for applying these type of functions. What is the need of macro, Tanya? Macro is used for doing the repetitive task. Like say, suppose this calculation that I am doing here, you can say that we can directly write the formula and do it. Yes, definitely. But suppose this work you need to do maybe for suppose this particular task you need to do every day. Suppose for 50 assets. Maybe you are in working into a company which is doing this calculation for various assets throughout the day, and every day you are doing it 50 times. So instead of doing it, writing the formula, this is just a simple example I have shown. A lot of complex calculations can also be done using this. So what is the benefit is that I don't need to write the formula, choose the cell address and all those things, that combination. Once one macro, I will do it only once in macro, and then wherever I need, I will simply apply the macro and automatically the calculation and the things will be done. Even I can have a graph created in the macro. Okay, so dashboard creation can be done. So these things can be done, can be converted into automated, you can say activity, and that helps to save lot of time. Here, one thing, of course, I hope you have noticed that the format of the data should be same. Okay, like the format here is first I wrote cost, then salvage, and then life. Now this macro is not smart enough to automatically understand that this will be the first parameter will be this cell or that cell. It will not automatically change it. So wherever you are applying, reapplying the macro, you have to continue following the same format. Here, if you write, suppose life of the asset at first, then you are writing the cost of the asset, and then you are writing the salvage value, and then you are calculating here the depreciation. Okay, so just one more I'm doing here. Suppose life of the asset is 5 years, the cost of the asset is say 1 lakh, and the salvage value is say 5,000 rupees. Now here if I apply this macro, will it work? Control D. See, it is showing you something, but what it has done, it is considering life of the asset as 5. It is considering the salvage value as 1 lakh, and the life of the asset is 5,000. You understand? Automatically, it will not change the parameters sequence. So that you need to do carefully. That is the format, the frame of the problem should be same. Then only you can apply it at multiple locations. So here, wherever I write it, there only it will be applied. So what it is doing actually in macro, it is copying the pattern that the first parameter, it will apply SLN, and the first parameter is the 2 cells above it, 3 cells, a third cell above it. Second parameter is just the second cell above it. And the third parameter is just the cell above it. So that is the pattern that it has copied in macro. So that is why here automatically it will not change it. You have to keep the frame proper so that you get the correct value. So that you have to keep in mind. Okay. So now I stop here. I have shown you both the macros with two very simple examples. One is with the formatting, the location specific macro, and then using a function, a simple financial function through macro. Okay. And now just I'm showing you how to save the file. Okay, so as I said, if you are working with macro, you have to save the file as macro enabled workbook, and the file extension will be XLSM. So I click on file, click on save as, I go to my folder, save as type, choose macro enabled workbook. It is the second option, macro enabled workbook. Okay, and then you give your file name, and then I just click save. So it is saved. Fine. Now, say I close this. Okay. I close the file and again I try to open it. Okay. Now, when I open it, I told you that it will automatically give you a enable content button. See, security warning. Some active content has been disabled. Click for more details. So do you want to check that whether anything, any malicious code is written behind it or not? In macro, we can also write our own code. That is VBA coding. It is not in the scope of your syllabus. So in Excel, we can also write coding and we can write lot of programming. We can do the programming and we can create customized worksheets in Excel. So that is why those are also macros. Okay, modules, function modules we can write and are actually macros. So that is why it is asking you, it gives a security warning for that because a malicious code can also be written like this and sent to you. So it is asking you, do you want to enable it? You have to enable. As you know, this is your file. You have created it. It's not malicious. You can click on enable content and then it will show you the money. Then your macro will be available. Like say here, if I go to a new worksheet and here if I click, what was that shortcut key for the first one? Now see, I forgot. Now how to get back? How to get that shortcut key that I have created? I too forgot. So what we can do, we can go to view, macros, view macros, company name. This macro I created. I want to know the shortcut key. I forgot that. So I click on options. And now see, it shows me the shortcut key is Control T and the description of the macro that was created. Okay, so Control T. So now I can come back and use Control T to get this. Understood? Okay, so this was the, you can say the basics of macro, simple introduction to it. What is macro? What are the types of macro we can work with? What are the basic requirements of working with macro and how you should save your file? All these things you need to know when you are working with macro. Okay, so for this discussion, I stop here and I will post these messages in the announcement section for your reference. I hope you have taken a screenshot of this. Then I will write down the steps also for you and post over there. Okay, is this fine? Thank you, Aishwarya. Yes, Pratik, it can be done. Slightly little more we have to do, but we can do that. Comma. Ankita, this comma is probably the separator that is used for writing the formula. It is that separator you're talking about. This comma, it is a separator between the parameters. Yeah. Yes, Vedant. Yes, it will work on the second sheet also because it is, the scope is workbook. That means the full file. A written down value means that diminishing balance method, no? If you want to use the macro in a new file, in that case, the scope you have to increase. While creating a macro, there is an option where you can choose it in new file also. So you can choose that and it will be available over there as well. I have no idea about sending the registration number here in the chat box. I really have no idea about that. Thank you. Yes, comma is the delimited, or you can say the separator in the parameters. $sign Sudhir is for making the cell address absolute. Well, not exactly Pratik, what you have written, it is not exactly copy paste. For simple work, what I have shown, you may say, yes, it is copy paste se bhi ho jayega, you are right. But if a lot of, along with that, you are also creating the charts or changing the data, or for complex calculation also when we use, it is not exactly copy paste. Huh? Yes, yes, macro or macro, same thing. Thank you, Chavi. Yes, same macro we can use in different worksheet. In that case, you have to increase the scope. While creating it, I've shown you one drop down where the option was available in the Word template or in a new file. So if you choose those, it can be used in other file as well. Okay. So now I think I've tried to answer many questions. Now I go to this announcement section and I'll write the steps. Okay. The first one is I am using it for the first one, the your absolute macro or the location specific macro. Okay. Give a macro name without space. And no point in writing, it can be alphanumeric. To understand that. Mention a shortcut key. Sorry. We write a description for the macro and then click OK. Here that key doesn't take, I don't know why. Give a macro name without spaces. I'll write it in another, or here only as continuation I'm writing. This is just example. Okay. Right now here what I'm writing. Now do the task that you want to record in macro. Means whatever the task you want to record in macro, that thing you are doing. Okay. Say for example, this, whatever I'm writing here. So select few cells, merge, I applied that. Cell border I applied, some fill color I applied. Say type company name I type there and then make it bold, change the font style, etc. So some formatting you will apply, and once all this work is done, now stop recording. This is very, very important. Many people forget to do this. Okay, so this you need to do, and then to use it, you just use that shortcut key. It will always be executed exactly at that same location, right? So I am posting it now in your chat box. Okay, so please check your this section. I have posted the steps for creating your this location specific macro. Just the steps for use relative references enabled. So you need to click on that to enable it. It's the same method, record macro, then give the macro name, shortcut key, description, whatever you want to write. So description you will do, and then you will click OK. Now do the calculations, may use formulas, whatever जो भी काम करना, whatever work you want to do, you need to do that. Do the calculations, do the task, the calculations, and then just simply, I'm not writing any example now. So now, because now you have understood, just you need to do the task, whatever you want to do, you can do the formatting, you can do apply formulas, calculation, whatever. Stop recording. This is very, very important. This macro will get executed as per your selected cell address. Okay. So earlier one was that it can be executed anywhere, at the specific location. This one is it will be executed only at that cell address. To create location independent macro. Right? So these are the things we did. Please practice it. Yeah. And those formulas I am not posting here now, that these PV and PV, because actually it is related with the cell addresses, the way the content is written. So that is why it is better if you can take a screenshot of these. So this I have already told, take a screenshot so that you can refer it. I'm reducing the size if you feel that it is not a problem. If I reduce the size, see. If you want, you can take a screenshot of this. All right. And for this, though, I've already shown you. You must have taken that. So that is it from my side. Now, anything if you want, you can see. Screenshots can't be posted here, otherwise I would have posted it here. I'm not able to post the screenshots here. So I'm coming back to the question section. If there is anything you can see, otherwise from my side, I have completed the discussion and I've posted the steps for macro also. Okay, so next class we can do maybe a few more examples. Then I'll see what else is there. Many important topics we have covered. So I also have to go through the syllabus. What are the topics left? And accordingly, I'll make plan for the next classes. Just trying to go to the last message now so that I can just see if there is something. Our next class is on Saturday. Saturday, same time, 6 to 8:30. The class is scheduled. Yes, we will do one revision class. So there we will discuss. Okay, so thank you. So we stop here. Thank you so much. Good night, everyone. Please revise whatever we have discussed in class. Sir, I stop sharing the screen now.
Okay, ma'am. Thank you.
Thank you. Good night.